Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Plug Power, ticker symbol PLUG. And so here we are looking at the daily time frame on Thursday, April 11th, during market hours, and the current price is right around $2.95, being down almost 4% on the day. And we have broken below a key level of $3 per share. Hopefully we don't close below it, but if we do, I wanted to go over some levels to the downside that might be pretty important and also could offer a good dip buying opportunity if they are respected as support. And so one of those levels is $2.83, which corresponds to the low hit on February 26th. So, ideally we don't want to be putting in lower lows, but if we get a wick below that level, that might actually be a good dip buying opportunity if we do end up closing above it with that acting as support. But then the next level down is going to be $2.68. And I actually think it would be good for the stock price to return to that level because it does correspond with this little gap that was formed over here between the trading days of January 19th and 22nd, so over that weekend. So the high on the 19th was $2.68, whereas the low on the 22nd was $2.70. So there is a 2-cent gap there. And I do think that it would be good for that to be filled. And if it is filled, hopefully that would be acting as support, therefore leaving no gaps to the downside, at least in this time frame. And then price could be moving higher. But if that is not going to happen, if price is able to get above $3 a share, I do think this downtrend is a pretty important level to be keeping an eye on. And so I drew that based on these two pivot highs, one being the high hit on February 1st, being at a price of $5.14. And then the other pivot high was hit on March 21st, being at a price of $3.71. And so the reason why I think that might be an important level to be paying attention to is because we've only seen one close above it. We've seen multiple wicks going above it, but it actually acting as resistance over here and resistance more recently. But we did get one close above that level on April 9th. However, while we did close above that level, we were not able to get a confirming close above it, which would be a secondary close above that level and above this day's high, which was $3.32. So right here, we did not see a close above that. There was no confirmation of a breakout. We did pull back and are now trading below $3 a share. But before I close this video, I did also want to do a Fibonacci retracement that could offer some more insight as to where the next level of support might be. And so if I draw that from the low here of $2.26.3 going up to the high here. And so from that retracement, we can see the 786 level at $2.87.9. The low so far for the trading day of April 11th is $2.90. We have not yet tested the 786, but I do think that could be a key level to be paying attention to in conjunction with this $2.83 level here marked by the yellow line. Since we do have a confluence of levels here, also, $3 being a psychological level, we do want to be paying attention to them. So hopefully, if we do see wicks below any of these levels, hopefully we don't see closes below 283, 288 really, being the 786 here. And hopefully we can perhaps close the week above $3 a share. I think that would be really good. But if not, I think it is good to be preparing for the downside, like filling this gap at $2.68, which could be a great dip buying opportunity. But of course, there could also be further downside, like returning to these lows at 226.3 or lower, like the green line at 224. So do keep that in mind, as it's always possible that these stocks do go lower. But hopefully we do reclaim at $3 soon and start making our way up these Fibonacci levels to reclaim $4 and so on. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.